You know, the truth is, and Danielle, I have to be honest about this too, I don't get it right every time. I don't. I've made thousands of investments. They're not all winners. This one was just, you know, all of us that have talked about this, all of us on that cap table, we've all talked to each other. You know, we're stunned. We're just stunned. But we don't have any answers yet. And so I would actually like to know how this one went down. And there's lots, if you just go online and see the due diligence that was done, you know, it's alleged. Again, I keep saying alleged because the stuff that goes out there on the internet, a lot of this stuff is garbage, but it's alleged that Bain was hired to do the due diligence for Tiger. I mean, it doesn't get any bigger than Tiger. And so I'd like to find out more about that. I'd like to find out more about the other members on the cap table. We all look like idiots. And, you know, I'm the first to admit it.
Shark Tank star Kevin O'Leary, aka Mr. Wonderful, has shared how he and Sam Bankman-Fried almost raised $8 billion from institutional investors to save crypto exchange FTX before it collapsed. However, when reports emerged of FTX being investigated by several authorities, including the U.S. Department of Justice and the Securities and Exchange Commission, all interested investors vanished. Hello and welcome to Money Talks. In today's video, Kevin O'Leary updates about the peripheral damage of the FTX collapse, his thoughts on Sam Bankman-Fried, and all the red flags that he missed. Kevin also reveals his take on regulatory work on cryptocurrencies and why he is embarrassed about his current position.
Let's just talk about an exchange. I will never put any money into an unregulated exchange ever again. The first thing I did, I mean, we have a policy in my shop that we don't just have diversification on portfolios, we have institutional diversification. We don't put all our capital, our cash, our investments in one institution. We want multiple exposure to different institutions because you never know when an FTX is going to happen or a Bear Stearns is going to happen. I mean, I've seen this movie before. This is not the first time. And so we have a large diversity of where we work with and who we work with and what institutions that we do business with. But the first thing we did with the remainder of our crypto assets is move it up into Canada under the OSC order in the BitBuy wallet, which is owned by Wonderfly. 100% compliant, scrutinized by the regulator there, proof of assets, no leverage on the accounts, no intermingling of accounts. All of that really matters, and that's where I think is the safest place to be right now. I'm not going back into an exchange that isn't regulated ever, and I think many institutions are going to take my position as well. I want to know with certainty that the regulator, because remember, we've got rules for exchanges. The NYSE, the NASDAQ, all kinds of exchanges around the world are already regulated. Why don't we just put the same rules on a crypto exchange? We don't have to wait forever. Meanwhile, there's a turf war amongst regulators in the US, and we're getting nowhere. But now the pressure is extreme. And I've had my chance to talk to the people I work with on the Hill.
Right.
Now that the midterms are over, after January 3rd, watch what happens. There's going to be a lot of pressure to bring down some regulation here.
Kevin O'Leary shared how he tried to save cryptocurrency exchange FTX before it collapsed in an interview with The Insider published Sunday. O'Leary is a paid spokesperson for FTX and has investment in the company. Prior to FTX's bankruptcy filing on November 11th, Mr. Wonderful was talking to a number of prospective investors interested in owning a stake in the crypto exchange. Sovereign wealth funds were interested in investing $8 billion to rescue FTX.
Yeah, I mean, I think that's fair. You know, just to be transparent and open about it, I was an investor in FTX International and an investor in FTX US, and I was a paid spokesperson. And so those are all facts, and I'm living with them every day. This was not one of my good investments. This was a bad investment for a whole host of reasons. Luckily, I'm fortunate that this particular investment, both the ones in FTX, the accounts that I had in FTX with millions of dollars in them, and the ownership of FTX US, was not in a fund that had other LPs. I owned it 100%. We hadn't made the decision to diversify yet. We were waiting to see if FTX would go public and how regulation was going to come forward before we put other people's money at risk. This was all my money. So I'm thankful for that. Of course, I hate losing money, but it's not going to change the way I operate or what I'm going to do tomorrow morning. I'm going to continue to be an investor. This is not about crypto. This is about bad policy, bad regulation or lack thereof, if you want to put it that way, and some very weak compliance management. That's what's happened to these companies. It doesn't change the potential of what crypto is going to be, but certainly it was a hit. There's no question about it. And, you know, it's embarrassing for me, obviously. So much due diligence had already occurred. I mean, if you look at the cap table of who was investors in this company, it's the who's who of financial services. And so I'm one of them. We're all embarrassed. We feel foolish. But luckily, when I look at the long term, thank goodness I make more good investments than bad ones. That's the way I look at it.
Mr. Wonderful has started moving his assets elsewhere, he revealed, noting that Canada is the only country that offers fully regulated broker-dealer exchange accounts. We have confidence that the regulatory environment in Canada scrutinizes accounts that can't be commingled, the Shark Tank star opened, adding that he believes the market has not seen the bottom of the FTX fallout yet.
Let's just talk about one bill that should be so simple to pass, it's not that complicated. I mean, we have a whole bunch of bills, but one that I think is the easiest to get done would be the Stablecoin Transparency Act, which only contemplates one thing, a stablecoin. And so, the policy being proposed says that any stablecoin issued, if it wishes to be regulated, which you would want now, would have to be audited every 30 days to make sure that each token or unit was backed by a single US dollar, and that was in the reserve, or a blend of treasury bills duration less than 12 months, which is exactly how money markets work. So that's not very complicated. Both sides could agree on that because it would make the US dollar through a stablecoin the default payment system worldwide. We use it for oil and other commodities. Why wouldn't we want to use it for this? So for me, getting that done. Now you've got a decision at regulator level. Should that be regulated by the Treasury that actually regulates the dollar, if you want to think of it that way, or should that be through the SEC or a different legislator that takes care of payment systems like credit cards, etc., or do the states have a say in it? So all of these things have to be worked out. But you would think if you got legislators on both sides of the aisle really working hard on this, they could figure it out and just get that one thing passed. Just that one thing. That would be very useful. And then go on to these various digital commodities acts that deal with Bitcoin and other tokens. But I would also add something else for you to think about, Danielle, that I've talked to many institutions about. And this is a conversation that's been going on the last few trading sessions last week. It's clear to many people now that you can get exposure to digital tokens and currencies with a matter of only 4 or 5 different positions because they're so interrelated. They're so correlated. So these 10,000 tokens, I think the majority of these are going to go away. If you want exposure to Bitcoin, you can do it with a position in Bitcoin itself, maybe some Ethereum, maybe some Polygon if you want a level 1 on top of payment systems of Ethereum, and maybe one other if you wished. But you don't need to hold 20 positions. And so I think there's going to be a concentration on where these assets are stored now and what is actually held. Certainly, we don't need 32 anymore. We're going to reduce down significantly, but we're going to keep our position on. But we're really culling through the portfolio now as we move it all up into Canada.
Noting that Sam Bankman-Fried called him to discuss the investments, O'Leary shared, "We had a brief conversation. He was very rational. We discussed a few things about, the timing on that $6 billion to $8 billion. But it was enough information for me to go back to the interested sources and confirm the number was 8. Mr. Wonderful noted that Bankman-Fried said during their call that regulators will come down hard on the situation.
Not on a daily basis, but again, let me be transparent and clear about what occurred. I was in Dallas, Texas, doing a keynote remarkably to a group of graduating cohorts of engineers and others at the University of Northern Texas. I think that's where it was. We got out of that speech, and that actual discussion that day was about how disruptive crypto was, so it's kind of ironic. I'm at the airport waiting to take off, and I get a call from one of my team members who is looking at the situation saying, "Hey, listen, Kevin, why don't we buy FTX? If it's really on the desk for sale, if CZ is going to buy it for between $6 and $8 million, why don't we buy it? And why can't we be part of that? Because remember, FTX had prior just done a round at a 32 billion valuation, and this was before any of this nefarious stuff was flying around. It was the Thursday, and so it wasn't clear to me whether it was 6 or 8 billion that they were looking for to clear the demand, or if you want to call it the run on the bank. But I needed to know the real number before we could syndicate that amount of capital. That's a lot of money. And so I called a contact there that I knew worked on the balance sheet, and I just got a voicemail, so I left it with that individual. And then maybe 2 minutes later, Sam called me back. And I said, Sam, look, I know you're going through a lot of pressure right now with this cash call and the whole thing with Binance and everything else, but I can't do anything with this or get involved unless I know what the number is. And he said, the number's 8, not 6. I said, okay, that's all I need to know. And that kind of a number, believe it or not, is not that big for sovereign wealth funds. And so, and I work with them in the indexing business, so that's when I started making calls. And there was a fair amount of going back and forth that afternoon. We delayed takeoff from the runway because I didn't want to lose signal. We were dealing with some sovereign wealth funds agents at that time. And then Gensler went on the air about 3 o'clock, and he made it clear that there was a hammer coming down. And the minute that occurred and the regulator was going to get involved and then these nefarious claims and allegations started, that option of syndicating it with sovereign wealth was no longer an option for obvious reasons. And so I didn't call Sam back. I texted him back, said it's not going to happen. And that was the end of that. And then over the weekend, the alleged hack occurred. My accounts have 0 in them. There is no accounting records there. They've been scraped. I talked to many other institutions about those accounts over the weekend. We were talking with our compliance departments and our lawyers, obviously, and that's where it stands today.
So do you agree with Kevin O'Leary's take on the FTX fiasco and the future of cryptocurrencies? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.